is Linda with our podcast, and I am really excited about introducing you to today's guest. I've known Don Kramer for probably more years than either one of us care to remember, but I got to know him when we were both on the board of PANO, the Pennsylvania Association of Nonprofit Organizations, together. And I realized very quickly that this man was probably the smartest and the best nonprofit attorney in the country. And I'm not getting paid to say that. I just have learned from the years that I know Don that he really knows his stuff. So I was really excited to bring him on because so many times people ask me questions about what is a 990 form. And I said, I always start with, I'm not an attorney, but here's someone to talk to if you need information. So I want to introduce Don and start out with a question of if he can give us just a basic outline, Don, of what a 990 is and why it's so important for nonprofits.
Well, thanks, Linda. Thanks for that nice introduction. It's good to be here. I haven't seen you for quite a while, but I get your stuff and aware of what you're doing, so that's great. The 990 is we do a webinar on this, a 90-minute webinar, which we'll try to condense for the purposes of this podcast today. But we start by asking that same question: is it a tax return? Is it an accountability device? Is it a PR device? Well, it's really all of those things. And people should take that approach when they're trying to fill it out. It is legally required in the sense that if you're an exempt organization, you have to file some sort of tax information return at least once every 3 years, or you automatically lose your exempt status. So it's got a risk in that regard. But most people do it and don't lose out on their exemption because they fail to file. The key issue, though, really is to view it as a PR document. We've been arguing that really from our office for 30 years or more. It used to be, and Linda, you and I are old enough to remember that an accountant would bring the 990 to the executive director on the day it was due. The executive director might or might not read it, but would sign it and send it off. At that point in time, the 990s were available to the public, but you had to go to the office to see it. Now they're all instantly available just on the internet, either at the GuideStar Candid site or now on the IRS Exempt Organization Search site. And you can get them, instantly. I can't tell you how many times I've had a potential client call me up to talk about an issue. And while we're talking, I can go and get that 990 and I can figure out more about their organization than they don't know themselves in some cases. So it's a really important tool, a really important tool.
I'm glad you brought that up about it being a PR document because in the years that I've been working with nonprofits, which is probably not quite as long as you have been, but close. And I have often talked to people who think it's just, the accountant fills it out. And like you said, they sign it, they don't even look at it. And they miss out on making the case for their organization. And I think it's so important that they think of this as it is something that people are going to see and they're going to look at. Um, who in the organization should typically be involved in preparing and reviewing the 990?
Well, that's a good question. Typically, an accountant will prepare a 990. And unfortunately, they usually start from last year's version. And even though changes have occurred during the year, they don't always pick it up. Also, accountants are not PR people, so that they're looking at it to fill in the numbers and have the numbers correct, which is obviously critical. But there's a lot of commentary which goes with those numbers and a lot of key factors which they reveal and a lot of questions which don't have any numbers attached to them at all. So they should be read very carefully by the organization. I'd like to see the development office be involved with the organization's review of it. There's a question on the return of whether it's reviewed by everybody on the board before it's filed. It doesn't have to be, but in my view, it's a very good opportunity just to show the board what's going on and what it is that the public can see about them, almost, as I say, almost instantaneously.
I think that's so critical, that people understand that it's not just the IRS that's going to look at this. Who else typically looks at a 990 because it is a public document?
Well, donors look at it particularly if they want to see what you're doing and how you're spending your money and how much you're paying your top staff people. Uh, Future employees look at it. They want to know whether you know what you're doing. They want to know whether you have good policies, and they want to know what the compensation rates are. So they look at it. Regulators look at it. The Attorney General in Pennsylvania tells us that when they get a complaint that they think is worth looking at, one of the very first things they do is look at the 990 to get a sense of, who the people are who are on the board, what kind of payments they're getting, are they following the things that make sense to them. But I guess the other people who look at it are the media, particularly the media who don't like you and who say that you didn't answer the questions correctly. And why was that? And, want to find out stuff that wouldn't otherwise necessarily be available.
That's true. There's one other group that looks at it that you might, I don't think you mentioned, but as a nonprofit consultant, and I've been consulting for 35 years, I guess, one of the first things I do is I look at the nonprofits 990 because I want to know what their issues are. And I can tell you that in looking at them, I remember having one client that I thought this organization really gets it. They're using it as a PR tool. They listed awards that they had received and the differences that they've made in the lives of the people they serve. And that's the kind of thing that a donor will look at. And I looked at it as a consultant and I thought, I really want to work with this organization. But I've looked at some 990s and said, I don't know if this organization knows what it's doing. They may not be ready for me yet to help them. So I think you really made a good
That's
point that
that's
they need to realize that the
that's
public
an
is
interesting
looking.
point. I hadn't thought of it from the consultant's point of view,
Yeah, so
but
now you have
I see
another
that
list
noted.
to add to your list. But
I just did.
yeah, good, good. And some people will say to me, well, I just look at the organization's website, but why is that not always the best thing to do?
Well, I'm trained as a lawyer, so I'm skeptical. So you can say anything you want on your website. You can say the moon is green if you want, but the tax return, the 990, is filed under penalty of perjury. And so what you say there cannot be knowingly wrong. What you say there has to be your best interest, your best guess, your best statement of what is true. And that's a different sense than what's on the website.
That's
You
a
never
really
say
good
anything
point.
bad about an organization on the website.
No.
If they have conflict of interest transactions, if they had somebody who got an excess benefit payment last year, or somebody stole from you last year, you're probably not going to put that on your website, but you have to put it on your 990.
That's a great point. And I think a lot of people, and for those that are listening to this podcast, if you're not a nonprofit, but maybe you're a donor or you want to be a donor to a nonprofit, I suggest you take Don's advice and look at the 990 before you make your decisions on as to where you want to give your money. So who is actually required to file a 990? And I know there are probably several different types of 990. So maybe you can tell us a little bit about who files and what
Well,
form
actually,
they
well,
file.
990 is a series of different forms, and we'll get to that series in a minute. But basically, who has to file is anybody who's exempt from federal income tax under Section 501A. Now, 501A lists 29 different sections now, the biggest
Wow.
group being 501c3, which is charities, but social welfare organizations, social clubs, a whole lot of other kinds of groups also have to file. Um, so that it's a big range. It's not only charities.
Is there anybody who's exempt from filing this that we would
Well, the
typically think of as
biggest
a charity?
exemption is church organizations and religious integrated auxiliaries of religious organizations. There are an estimated 300,000 or more of them in the world today, in the country today. and none of them is required to file a tax return. That's the biggest exemption.
It's good to know. And I know that not everybody files the same form, so if you can just tell us a little bit about the different forms that are required to be filed by different organizations.
Yeah, the private foundations, who are 501c3 organizations, but a division of 501c3, have to file a 990 PF. It is much more number intense and much less information intense, but it is a separate form, has to be filed by every private foundation, no matter what its size. There's a 990N form, which can be filed by organizations which normally receive gross receipts of $50,000 or less during the year. Of the 1.3 million public charities in the country, about 70% of them file the 990N form because they just, the IRS doesn't really see there's much revenue there, doesn't really care a whole lot. They're small organizations, and so they get away with putting that on the website. There's a 990EZ for smaller organizations who have incomes of $200,000 or less and assets of $500,000 or less at the end of the year. There's a big group there, but there's about 300,000 or more which file what we call the full 990, which is the detailed form that we'll talk about today. And that's for anybody who brings in revenue of more than 200,000 or has assets of more than 500,000 at the end of the year. So it's a big group, but it does give you an indication of the nonprofit world, where the great bulk of the organizations do not have revenues and do not have a great impact on the economy, but the bigger ones have huge revenues in many cases and huge impact on the economy. And that's what we're reporting on.
That's really interesting to think that 70% of the charities are really very, very small.
Yes.
But they're still required to file some things.
You have to file something, or if you don't do it for 3 years, you lose your exemption. And then there are ways to get it back, but it's tedious.
And I recall a couple of years ago when the IRS really decided to crack down on this, and I forget how many did have their tax exemption removed, but it was quite a substantial number, if I remember correctly.
I think it was close to 500,000.
I thought it
that
was
have ultimately had their exemptions removed for failing to file. I mean, this was required by the tax code, I think, of 2006, when they modified a lot of charitable provisions. And the IRS just didn't know who was out there who was really alive. And so this provision was put in. It's a pretty generous provision, but there were a lot of organizations who weren't functioning. I mean, I had several of them in my file drawer at the time, and they just didn't exist anymore. But the IRS didn't know it.
Well, that's good that we know that someone's keeping an eye on all of this. Tell us about the full Form 990, which some of the organizations listening probably have to file, because it's not a tremendous amount of money before you have to file a full form.
Yeah.
So tell us about
Well,
that.
if you're dealing with Linda, you're probably an organization that doesn't file the 990N, right, Linda? You don't have many of those clients. The form itself, and people may want to pull it out if they have it available now, and maybe even pause the program to get it, because we're going to follow through in talking about various items on it. But the form itself is 12 pages, got lots and lots of questions about it. It's got the possibility of 15 separate schedules that get attached to it. So, it covers the missions and accomplishments. It covers all the financial stuff. It has sections on the governing body and who they are and how they function. It has sections on policies not required by the tax law, but are good policies that the IRS asks about. It's got obviously the list of officers and directors and their income. It's got income statements, financial expense statements, balance sheets, and lots of that financial information. And it's got all these schedules which go to various kinds of things of your public charity status, your fundraising, your endowment maintenance, your related organizations, a whole lot of things like that. When this is done and this gets filed, you and I, as members of the public, can know infinitely more about these organizations than you would ever know about a for-profit business. For-profit businesses, unless you're selling securities, basically don't have to file their information publicly. They don't have to tell you who they are. They don't have to tell you what some of their issues are. They don't have to tell you what they pay people. All that is confidential. But in the nonprofit world, because of the 990, we can know a huge amount about these organizations that we want to give to, or we want to rely on, or we want to be employed by, in ways that you could never know about a business of the same size.
Well, it sounds like it makes us feel good about filing our personal income taxes. We don't have to
That's
have all
right.
the pressure on
That's
it.
right.
But are there instructions that can help people get through this, or do they need to hire an attorney to help them get through it?
Well, the ordinary person probably doesn't want to do their own return, although there are instructions that the IRS puts out on the form itself and on each of the separate schedules that are available to you. I think the instructions are really quite good, and they do make a lot of distinctions that are not necessarily clear on the face of the form, but are things that they can help you in determining how you answer it. I think that's really a very good opportunity. And so if you have any questions at all, you should refer to those instructions to see what they say.
That's great to hear, because I'll tell you, instructions, when it comes to putting things together, if you ever ordered something in the mail and you have to assemble it yourself, the instructions these days in general are pretty terrible. Mostly when I get things that they have a couple pictures and then I'm supposed to figure it out from those pictures how to put something together. So I'm glad to hear that the government is giving us good instructions for this. I think that's really good news for people. I want to kind of go back to talking about what you said earlier about using your 990 as a public relations tool. And tell us about um, where you can explain your mission and your accomplishments, because I think that's so critical.
Well, there's two basic places to do it. One is on the very first page of the form, where it asks you to describe the organization's mission or most significant activities. And you have your choice, because the question on the next page is slightly different. But describing your most significant activities, it doesn't give you a lot of space. It gives you 3 lines to do it. But my sense is, if you're an international refugee organization, you provide humanitarian aid to 6 million people a year in 27 different countries, or something of that nature, to make it something that I, as a reader, would like to see. One of the questions and one of the things I have about accountants is that these forms are all filed electronically, and you only have a certain amount of space. But some of the accountants put an mission statement or an activity statement which is so long it doesn't fit in the place where it's supposed to go. And what happens then is it defaults over to Schedule O, which is another schedule which is available for you to explain anything you want, which doesn't make sense necessarily on itself. But it's about 26 pages down in the pile, and nobody wants to go there. So the key thing is, if you want to have an impact, you want to say something impressive, and you want to say it in as few words as is necessary to fit in the space, because otherwise you totally lose your opportunity at that point.
I think that's a great point. I think you and I have probably told numerous organizations over the years, please cut down your mission statement. It shouldn't be a page long or a couple paragraphs long. It should
Right,
be a couple
right.
sentences at the most.
And
So,
this is a good exercise for you, just to
yeah.
fit in.
Uh,
And on the page 2, it says, describe the organization's mission. And that really asks for the formally adopted mission. You get 4 lines here, but you have the same issue that you want to be sure that it's cogent, that it fits, and that it says what you're really trying to do. The second page also has a big space for describing your program service accomplishments. My favorite story about program service accomplishments was when I looked at that space, it said small. Not we had served, 6 million people, but small. That was the total answer. I figured that's not really an organization I wanted to help out, except I was on the board when I saw that. So we changed that. But that's one of the opportunities which is totally missed. But you've got 3 specific programs that you can talk about. Again, you talk about if you're a job training organization, how many people did you train? How many people got jobs? How many people got off unemployment or got off welfare rolls? How many continued to hold their jobs a year or 2 later? Whatever the numbers are that you can legitimately put down there, which would be impressive, that's the kind of thing you want to do. Again, you want to fit it in the space because you want people to read it without having to go to Schedule O. But it does give you the opportunity to add additional accomplishments on Schedule O. And it's really, what did you accomplish with these projects? Not just what did you do, but what did you accomplish? And that's where you have a major opportunity to either, convince people that you're doing something useful to change the world, or you can squander that space and not help at all.
What if an organization makes changes in its programs? How do they list that on their 990 form?
Well, that's a good question, because one of the things that nonprofits have to worry about is unrelated business income. And they have unrelated business income when they carry on trade or business, which is carried on regularly, but it's not related to the purpose for which they are exempt. The IRS doesn't have any way to get a change in what you're doing other than through the 990. You can't tell them, we used to work to prevent polio and now we're doing some other disease. There's no way to say that. They won't listen to that. So you put that here. This is the only way that you can really make that change, which is significant if you're dealing with a question of unrelated business taxable income. The second way that is important is an example of a number of years ago. There was a group, I think in Boston, which began to enter into a loan program that the government thought was lending to terrorists in the Mideast. They hadn't put that on their application for exemption, and they hadn't, told anybody that they were doing it. The IRS prosecuted the officers. They didn't prosecute them for making loans to help terrorists, which is against the law. They prosecuted them for not telling the IRS they were doing it. And so, if the IRS wants to get you or the government wants to get you, they can get you on a very technical basis like that. And basically, there's no defense to it. So one of the questions we always get is, what is a significant change in the program? And my view is that whatever you're telling your donors in your newsletter or your constituents or however you generally communicate to the public, if it's significant enough to tell them about it, it's significant enough to tell the IRS about it, if it's different from what you've been doing in the past. And that's not a rigorous test, but the idea is you err on the side of telling them something new and different if that's what is happening.
But it sounds like it can get very complex. One of the questions, I guess, that I think a lot of people might have is, I know you have to report if you're paying excess benefits to any of the employees. What would the IRS consider an excess benefit, or does it depend on the organization?
Well, the general rule for excess benefits, which applies particularly to C3 charities and C4 social welfare organizations, is that somebody who is an insider, which is an officer or a director or a substantial contributor, is getting more from the organization than the organization is getting in return. So the one clear example is excess compensation. You're an executive director, and the ordinary salary for executive directors of an organization of your size and complexity is $150,000 a year, but you're getting $350,000 a year. That could be an excess benefit. It could happen if you had, if you were renting from somebody on your board at more than fair market value. So that could be an excess benefit. It's just any time where an insider is getting more than they're giving in return. And that is subject to tax. It's subject to a tax both on the person who receives the benefit, and it's a tax on any manager who is aware of that. And so you want to be clear that you have a conflict of interest policy so that you can determine in advance whether it's a possibility of an excess benefit. The excess benefit rules cover not only the individual, but family members and businesses where they have a controlling interest, a major interest in it. So the rules are a little technical. They're also in the IRS instructions, but that's important for an organization to know. And when we get to this list of the schedules that are attached, you have to report that on a separate schedule. And remember, it's under penalty of perjury. So if you don't report it, somebody can get in trouble for that. So it's a very significant form on how it works and what it asks for.
You mentioned conflict of interest, and I think this is something that a lot of charities struggle with. What is a conflict of interest? So let's say you have 15 people on your board and one of them is a banker. Does that mean that you cannot do any business with that banker's bank, even though he or she is an employee of the bank, not the owner? But can you just talk a little bit about conflict of interest? I know that could be a whole separate podcast.
Yes, you certainly could. Well, we're talking about public charities here. With private foundations, it's much more stringent. You can't really have any economic transactions with your people on your board. But with public charities, you could have the president and an owner of the bank on your board. And as long as the economic relationship with the bank was standard, in other words, you had a checking account, and on checking accounts, the fee is XYZ, and that's what you get charged, that's perfectly okay. If you have a car dealer on your board who sells you cars at the lowest price, the car dealer gets them for, that's okay too. And it may be a great benefit to you. You're going to have to report it if it's unusual and it's not standard policy. But, it's a conflict of interest, but it's not illegal. So it's only illegal if the guy charges you twice the price for it and you pay it, or you rent property from a developer who serves on your board and you pay more than fair market value for that. It's with excess benefits in the public charity world, it's really a question of, is the value fair and reasonable on both sides? And if it's not, and it's too much for the insider, then it's subject to tax.
Other than conflict of interest, what other issues does the IRS look at as far as your governance, who's on your board of directors? Do they look at the size, the scope of the board, board meetings? What things do they ask for?
Yeah, I'm skipping over a lot here, but when you get to part 6 of the tax return, the return on page 6, they ask a number of questions. They ask how many members you have on your board, how many voting members, how many are independent, which means they're not being paid by the organization at all, except maybe a reimbursement of expenses. But they ask an interesting question: does any officer, director, or trustee have a family or business relationship with any other officer, director, or trustee. And that's to try to get at these insider deals. These relationships are not necessarily illegal, but they do affect how the public views you. They affect maybe how you operate the organization. This is not the question of conflict of interest here, but if you have, 20 Eisenhowers on the board and you say nobody's related to anybody else, that's going to be a real question because, Eisenhower is not a common name. If you had 8 Johnsons or 8 Smiths, it could be that they're all unrelated. But, a distinctive name, Lysakowski. I don't know how many Lysakowskis there are in the world.
You wouldn't find too many of us in the world.
But, if you had a couple of them on the board, they're probably going to be related. And so you need to have that, discussed. Very often they're husbands and wives on the board. Sometimes they're parents and kids on the board. Sometimes they don't have the same name, but you still have to report that relationship. There are a couple exceptions to that. You don't have to report relationships which are just fair market value relationships, like the car dealer selling you a car at the regular price which the dealer would sell it to anybody else. But there are exemptions for attorney-client privilege. If I have my criminal lawyer on the board, I don't really want to disclose that to the world. I have my physician privilege. I don't want to refer that I'm going to an oncologist, currently. And I have the clergy relationship. I don't necessarily want to say, to whom I'm making a confession every week. So those 3 are exempted. But generally, the relationships have to be disclosed.
Can you elaborate a little bit more on the compensation section? What needs?
Well, let me go before we get there if we have time, because there are a couple other things here which I think are important on the governance and management section. One is question 5, did the organization become aware during the year of a significant version of the corporation's assets? In other words, did somebody steal from you? One of the people in our office used to be the director of the Bureau of Charities in Pennsylvania. And he has always said that they would repeatedly get situations where some trusted bookkeeper would steal from the organization. Be found out, the organization would, fire him immediately, but wouldn't do anything about it. So they'd go down the street and get a job as bookkeeper for another organization and steal from them. This precludes that from happening in many circumstances, because now if it's a significant amount of money, which is defined in the instructions, you have to report that. And you have to put it on the board, and you have to tell what you did about it. So it catches people in their tracks a lot more quickly than it used to, and I think is very valuable for the community. Another question here is, do you have minutes for your meetings? Now, if Linda is advising you, you probably have minutes for the meetings, but not everybody does. And I've reported litigation in my newsletter. They litigated who was on the board because they didn't know. And the period 990s changed the people who were on the board over the years, but they didn't have any minutes to prove who was there. And so they had to argue over that in litigation, which took, years and a lot of money to do it. So the other section on this page is the policies which are not required by the Internal Revenue Code. And there they ask specifically, one, have you given it to the members before it's filed? Do you have a conflict of interest policy, a whistleblower policy, and a document and destruction and retention policy? Those are the 3 that the IRS asks about specifically. To my knowledge, conflict of interest policies are not legally required except in New York. The other policies are not required, to my knowledge, legally in any state, but they're clearly good policies. They're good to have. And the regulators who see no there and the donors who see no there in answer to those questions might stop and take a second look to see what's going on.
Another
So,
good reason that we need to think about this as a public relation tool, because those are the things that I agree
yeah,
that owners will do
absolutely.
that. Well, why
Yeah.
don't you have
One of
this?
my favorite questions here is, are there any officers, directors, or trustees who can't be reached at your office address? Um, what about people who died since the, form was, before the form was filed? But it used to be that people would put, their board list on there, which had the name and secretary's name and birthdays and family names and social security numbers sometimes. Now they just ask for who you are and assume that you can be reached at the office address.
No, there's probably about a zillion more questions we could ask, but can you kind of give us a little brief description of what they're asking for in the way of statements of revenue and functional expenses and the balance sheet? Do they ask for
You
all
want
of
to talk at
this?
all about the compensation section? I'll just say two words about that if you want. I mean, it
Okay.
is the most read page in the tax return.
Hmm.
For your CEO and CFO, you have to report their compensation, even though they earn less than $100,000. And the one thing that I think, well, the other thing is that if you're a fiscal year organization, your numbers for compensation will not jibe with the numbers that you put on your form for that, what happened that year. The numbers that you have to put in are for the calendar year ending within the fiscal year. So if you're a college or university of a June 30 fiscal year, you're going to have compensation issues for last year ending in December. The other thing about this, it asks for the average number of hours per week that your people are working for the organization. And very often you'll see everybody's got 1 hour. Very seldom do you see any differentiation, even though the board chair spends a lot more time on it than the other board people. The thing that bugs me is where you have people saying they spend no hours a week on the average. Well, that's a violation of your fiduciary duty, because the only way you can average zero is to spend no time ever.
Right.
So that looks pretty bad when you kind of put that on the organization's, website and your tax return.
You've really given us some great advice here. One thing I wanted to ask about is, I know there's a schedule that talks about lobbying expense, and that always seems to be a big issue with, are nonprofits allowed to lobby? Are they allowed to advocate? And what's the difference?
Well, my basic position is that a charity that is not lobbying is not doing its job, because so much of what charities deal with are affected by public policy and could be much better remediated if they had good public policy. So my view of lobbying is that if you're not doing it, you're not doing your job. There's a difference, as you say, between advocacy, which is generally saying we ought to have clean water, we ought to have clean air, we ought to have mental health programs to protect people, stuff like that, as opposed to lobbying, which is saying we should pass this bill, which has this provision on mental health, or this provision on environmental protection of air and water, those kinds of things. Lobbying does not cover litigation. So you can litigate all day and not be lobbying. Lobbying at the federal level does not include trying to change regulations, which already exist, to implement a law. They don't include general statements of the advocacy type. They only include actual statements for identifiable or pending legislation. So it's a fairly limited amount. There are ways that you can figure it out. There is an election that you can make to govern it simply by how much dollars you spend. But as I say, I look at that because I am concerned that if you're not lobbying, you're not doing your job. Particularly, we're recording this at a time when the Congress is considering a budget bill, considering significant changes on how charitable organizations would be taxed themselves, how they could have their exemption suspended. A lot of issues like that which should be, should be of real interest to charities in their operations.
Well, I know there's probably, we could go on for hours. In fact, I wanted to mention that we're going to be giving you some links to Don's weekly newsletter, which is an excellent newsletter. I've been getting it for years, and I learn something every time I read it, and I think, oh yeah, this I've dealt with this issue myself, so with some of my clients. So I strongly suggest you subscribe to the newsletter. And as
The
Don
newsletter
said,
is free, so you can get it for free.
right,
And it comes out every week with a new question and answer on issues like this.
and there are real questions that people send in, so they're
We
questions
also
that
do a monthly webinar with Pano,
right.
and we do, as I said, a regular webinar on the full 990, which is a 90-minute webinar going over a lot more things than we've had an
Right, so I certainly
opportunity to
suggest
cover.
that you take that webinar and not just the 990 webinar, but Don always has some great webinars. But before we wrap up, is there anything that we didn't talk about that you would like to mention to people on the 990 forms in the time that we have left?
Well, I think, they're critical. We've really talked about it, that they are public relations. They are looked by people who want to know about your organization. They have to be accurate. You have to answer all the questions. There are penalties for not doing that, other than losing your exempt status. But they are an opportunity to distinguish yourself from the others who are doing the same kind of thing you're doing. They're also a trap for the unwary if you don't answer the questions correctly. Or if there's a discrepancy in how it appears, you don't explain it on Schedule O. On Schedule O, you can explain anything which might not be obvious to somebody who's reading it. If you had a whole lot of income this year and not a whole lot of income last year, why have the discrepancy? If your assets change significantly, if there's a good reason, put it there. If you paid your executive director $100,000 this year, or last year you paid $100,000, this year you paid $250,000, maybe they retired and got a vested retirement benefit, which would explain that. Whereas if you didn't explain it, people would really wonder what's going on with this executive director character. So it's one to think about, and not just sign and file. It's one to think about and have your people look at carefully to see that you're presenting yourself in the best possible light.
Thanks so much, Don. And I think this is so critical that you mentioned this earlier, that not only should the executive director be very familiar with this document, but the development office, the board members should be familiar with it. So it's not just something that, okay, the accountant says this is done and we trust the accountant, so we'll sign off on it. It really is a critical document. And I want to thank you for your time, Don. And as I said, whether you're a board member, a staff member, a donor, whatever, really give some serious thought to taking one of Don's webinars and learning more about the 990, because we obviously couldn't get all of that wisdom out of his head in one podcast. But I want to thank you so much for being on this podcast. And is there any final words you want to say before we close?
No, I think we've covered it pretty well, and hope people will just take this really seriously as they
I
go
hope
about
so
dealing with it.
too. So thanks so much, Don, and I'll look forward to, maybe we'll have you on another time to talk about some of the things that we touched on briefly today, but we'll look forward to maybe having a future visit with you. So thanks so much,
Sure,
Don.
I'm happy to do it.
Okay, thanks. Bye.